Good evening, friends. We are back with new edition of Tax Audit in series. Today, we are going to discuss first clauses, clause number 1 to 20 in our tax audit report in Form 3CD. As far as tax audit is concerned, as you are aware, that now we will be starting doing actually tax audits, and it is necessary that we have adequate inputs before we commence the job. These first clauses may look innocuous, but there are various errors which are committed. A simple error which was noticed that whenever in case of a company, there is a question that under which clause you are doing tax audit, and a good number of persons answer that it is under clause A, which says that if your turnover exceeds 2 crore, then tax audit is applicable. However, if you go through the provisos, the third proviso says, provided that if the audit is applicable under any other law for the time being in force, then these provisions are not applicable. You have to just give Form 3CD, give the particulars. So such errors were noticed. So as far as these clauses are concerned, please don't take them casually, because whenever you are doing tax audit, you are submitting reports, and thereafter the CBDT also runs through artificial intelligence. All such small and big errors are noticed, and wherever the errors are significant, they refer it to the institute, and our tax audit quality review board then checks whether those errors were material, not material, and appropriate decisions are taken. At times, the cases are referred for disciplinary committee. So, Chairman CA Dr. Raj Chawla felt that rather than doing post-mortem of audit reports, it is always better that we educate the Chartered Accountants fraternity, the article clerks, how to fill up the Forms 3CD, how to address Form 3CA, 3CB, so that there is no occasion for any error, any mistake. And then the standard of tax audit also enhances. So friends, today we will be addressing this first clause number 1 to 20. And for this edition, let me welcome Chairman of TAQRB, CA Dr. Raj Chawla, our office, Anita is there, and of course the learned speaker, Manoj Lamba. CA Manoj Lamba is having experience of decades of conducting tax audit. He also specializes in this particular field. Therefore, CA Dr. Raj Chawla has specifically asked CA Manoj Lamba to share the wisdom with all our members. And I'm sure that once when you listen to this webinar, you will be much enlightened about these clauses. Of course, in case of tax audit, if you have any query, you please forward it to TAQRB. The email ID is taqrb@icai.in. We have already received hundreds of queries. So we will compile all those queries and will publish answers to those queries appropriately as the chairman will guide. So with this, now let me welcome the audience and hand over the proceedings to Chairman CA Dr. Raj Chawla. Thank you.
Thank you, Chidle sir. Good evening to all. I welcome all the members in this today webinar, session 4, commonly found irregularities in form number 3CD, clause 1 to 20. So I welcome you all in a very important webinar from this series. And as we are going to discuss the commonly found irregularity in form number 3CD. As you all are aware, tax audit plays a vital role in ensuring compliance with tax law and regulations. They help identify and discrepancies or errors in a financial statement and tax returns of businesses, thereby promoting transparency and fairness in the tax system. Continuing its effort to improve the quality of tax audit, TAQRB bring out this webinar series on commonly found irregularity in form number 3CD, clause 1 to 20, which will help and guide members in enhancing and improving the quality of tax audit. For sharing this deep insight on the same, we have with us CA Manoj Lambaji. Manoj Lambaji is a practicing chartered accountant. He is a CA by profession and trainer by passion. Besides that, he is also a law graduate. He has vast experience of 25 years in auditing, income tax and company law. He has been regularly associated with ICI since 1999. He has mentored over 10,000 students and fellow members by taking over 500 plus seminars and webinars throughout India. He has also authored three books titled A Simplified Guide to GST for BCom Kurukshetra University students, ebook on Vivad Se Vishwas, and ebook on rectification of mistake under Income Tax Act. And even I personally have experience of CM Manoj Lamba that when I organized a webinar on my personal level, more than 50,000 viewers were there. So now I request CM Manoj Lambaji to take over the session and enlighten us with their insight on the today's topic.
Chairman of Taxation Audit Quality Review Board CA Raj Chawla ji, Vice Chairman of the Board CA Shekhar Chitle ji, and my dear professional colleagues who are attending this webinar, a very good evening to all. First of all, I convey my sincere thanks to Taxation Audit Quality Review Board of ICAI, who has given me an opportunity to be a part of this web series, which is conducted all over the India on this tax audit season. Now this year tax audit season is begun, and my big brother CA Raj Chawla is very, very active, and he has headed this very important board, that is Taxation Audit Quality Review Board, which is constituted by the Institute very recently in 2018, just 5 years back, to review and improve the quality of tax audit. Because the quality of tax audit is always in questions. Knowingly or unknowingly, we are committing so many mistakes while issuing the tax audit reports. Friends, since this board has constituted in 2018 and it is just a 5-year-old board, and reviewing the quality of tax audit report issued by the members, very rightly said by Vice Chairman of the board, Shekhar Chitle ji, rather than post-mortem the reports issued by the member, it is the duty of the board of the ICI, very important board of the ICI, to educate the members to how to improve the quality of tax audit. What mistakes, what things we are doing wrong, so that member can aware about that and we can take the rectificatory measure for the act. So friends, let's start the discussion. The topic given to me is most commonly error in clause number 1 to clause number 20 of form number 3CT. I am sharing my study material, you can say, or PPT, you can say, by way of a book, by way of a publication of this very important board, that is Taxation Audit Quality Review Board. Taxation Audit Quality Review Board has recently bring out a publication where they are pointed out what kind of mistakes are generally found by this review board while reviewing the reports. So friends, I am sharing my screen with you. Just a minute.
Manojji, are you getting this sharing?
Pardon, sir?
You have this sharing facility, na?
Yeah.
Yeah, okay.
Friends, let's start the discussions of today's webinar. I am sharing my thoughts on the topic of today's from a publication of Taxation Audit Quality Review Board ICAI, that is Study on Compliances in Reporting the Tax Audit Report. Friends, the tax audit in income tax plays a very important role in improvising the tax administration and overall compliance of the taxpayer. This concept of tax audit has been introduced in income tax law. The section 44AB of Income Tax Act was introduced in the Income Tax Act 1961 by the Finance Act 1984 with effect from 1st April 1985 and effective from 1985-1986. At that time, in year 84, while presenting the finance bill, our Honorable past President of India, at that time Finance Minister, Mr. Pranab Mukherjee ji, had introduced this new section to the dictionary of, to the law of income tax. And that section 44AB becomes the bread and butter of our member, particularly in the smaller cities that are tier 2 or tier 3 cities. Section 44AB, which is introduced with effect from 1st April 1985, very clearly states that it is obligatory for a person carrying on business or profession. It is obligatory on the part of a person carrying on business or profession to get his account audited by a chartered accountant and furnished by a specified date the report in the prescribed form of such audit if the total sales, turnover or gross receipt in the business in the relevant previous year exceeds the prescribed limit. Similarly, there is a provision for a profession. And the intention behind, but the memorandum explaining the provisions of the Finance Bill of 1984 says about that tax audit concept. The memorandum explaining the provision of Finance Bill 1984 very clearly states that the compulsory audit, this compulsory audit is intended to ensure proper maintenance of books of account and other record. Proper maintenance of books of account and records. In order to reflect the true income of the taxpayer. The first and the foremost purpose of tax audit, to ensure proper maintenance of books of account and other record in order to reflect true income of the taxpayer. And the second objective, that is very important, my dear friends, why this provision has been introduced. To facilitate the administration of tax law by a proper presentation of accounts before the tax authorities. The second objective is very, very important, my dear friends, to facilitate the administration of tax law by proper presentation of accounts before the tax authorities. That means even in the 1985, 38 years back, the government wants to provide ease of doing work to their tax administrators. They want that the chartered accountant will provide help in this work. That's why that very important section, which is bread and butter of many of our members, in particularly in the tier 2 and tier 3 cities of the India, who will help the tax authority in performance of their duty indirectly by performing this tax audit attest function. So friends, this is the memorandum explaining the provisions of Finance Bill 1984, why this tax audit comes into the effect. So friends, moving further, what is this Taxation Audit Quality Review Board? Very important to know before we go into deep dive into this tax audit monthly series. It is very important to know for every member what is this Taxation Audit Quality Review Board. ICAI, the Institute of Chartered Accountants of India, has also a regulatory role to play. Very important, my dear friends. Regulatory role to play. Continuing with its commitment to serve the nation, because we are the partner in nation building. And in order to improve the reporting of compliance under the taxation laws, both direct as well as indirect, the Council of the Institute constituted Taxation Audit Quality Review Board in year 2018. So friends, this very important board is constituted in 2018 to improve the reporting of compliances in various taxation law. The basic objective to improve the reporting of compliances, under various taxation law. That's why very rightly said by our Vice Chairman of the board, CA Shekhar Chitleji, rather than post-mortem the reports issued by the member, it should be the objective of the board to improve the quality of tax audit report issued by the member. For that purpose, the institute has to take such kind of initiatives on day-on-day basis, particularly in this tax audit session, where we can educate the member what kind of improvement required in their tax audit report, where we are lacking behind in the compliances of reporting. So for that, this taxation quality audit report was there. The board under its purview can review any report. What this board is doing, the board under its purview can review any report, prescribed under the Income Tax Act 1961 and rules thereunder, and any report prescribed under the indirect tax law, including GST, which is certified by a chartered accountant in respect of certain enterprises to view to determine to the extent possible. But they want compliance with the reporting requirement prescribed under various section of Income Tax Act and rules thereunder, similarly under GST laws and rules made thereunder, and compliance with the respective pronouncement, guidance note, technical guides of the ICAI. The board may review various reports either on suo motu basis or reference made to it in respect of taxation matter, either by the CBDT or by the CBEC, IC, or CAG, or State Commercial Tax Department, etc. The board may issue the advisory to the members if there are some non-compliances in the report. But if there are some serious non-compliances there, the board can also refer the matter to the director discipline of the institute for initiating appropriate disciplinary action against the tax auditor under the Chartered Accountants Act 1949, my dear friends. So the basic role of this very important board is to improve, to guide, to educate the member about the improvement of quality, and quality of the tax audit report issued by the member, either in respect of direct taxes or in respect of indirect taxes, my dear friends. So this is the basic objective of this Taxation Audit Quality Review Board. And if there is a minor mistake, the board appropriately bring the non-compliance to the attention of the tax auditor only by way of issuing a advisory. And if there is some major non-compliance is there, some major default is there, then it can refer the matter to the disciplinary board of the ICI for disciplinary action under the income tax. The law contained about tax audit of income tax contained in section 44AB of Income Tax Act 1961. My dear friend, this section is the foundation. This section is the Gita of tax audit, Bible of the tax audit, on which entire tax audit law is contained. And this section is very, very complicated. As and when I read it again, I found something new. So friends, it is very important topic which is very close to my heart. Now I am starting my discussion of the day, which is clauses number 1 to 20 of form number 3CD. What kind of common mistakes generally found by the Taxation Audit Quality Review Board in the tax audit report issued by the member. But friends, before I jump into the 3CD part, that is statement of particular furnished along with 3CA or 3CB. That form 3CD is basically statement of particulars. The basic audit report is either form number 3CA or form number 3CB. I always said very strongly in my tax audit webinars or seminars that form number 3CA and 3CB is the Karam Bhumi of chartered accountants who are conducting the tax audit, like our Karam Bhumi, like our Karam Kshetra. Whatever we have to return, what qualification, what observation, what opinions we have to given, that is to be given in form number 3CA or 3CB as the case may be applicable. 3CD is the statement of particular. We have to verify the particular. We have to comment on the correctness of the particular contained in form number 3CD. But our Karam Kshetra, our Karya Bhumi is form 3CB or 3CA only. So my dear friends, first thing I want to make you clear, very, very clear, anything if we want to report in respect of a tax audit of a particular SSC, then this particular fact is not to be written anywhere. It is to be written only and only when? Only in form number 3CA and 3CB as the case may be. When form 3CA is applicable or where form 3CB is applicable. The law says, the rule says, in case of person who carries on business or profession or who is required by under any law to get his account audited, be in form number 3CA. But the law says, if a person carries on business or profession who is required by or under any other law to get his account audited, very important, my dear friends. By or under any other law to get his accounts audited, be in form number 3CA. But in case of a person who carries on business or profession, but not being a person referred to in clause A, then form number 3CB, then form number 3CB. Let's take a practical example. Take an example of a private limited company who is recently incorporated in January 2023 and whose turnover is exceeding rupees 10 crore from January 23 to March 23. For assessment year 23-24, he is liable for tax audit as per the provisions of income tax. We have to give his report. We have to give his tax audit report. Which form I supposed to use? Form number 3CA or 3CD? Form 3CA or 3CD? So friends, In such a case, if we read company law, if the company is incorporated after December of a financial year, in such case, the first financial year of the company can extend up to 18 months. The first audit under the Companies Act 13 is required to be done only on 31st March 2025. That's even in this case, it is a company SSC. It is a company SSC whose accounts is otherwise required to be audited in the Companies Act 2013. But in this particular first year, he is not required to get his account audited under the Companies Act 2013. So in that particular case, my dear friends, he will issue his audit report. He or she will issue his audit report in form number 3CB, not in form number 3CA. So friends, moving further. That with respect to standard on auditing. And one very important standard on auditing is SA 700. SA 700. I am coming to that. Revised SA 700, forming an opinion and reporting on financial statement. Revised SA 700, that is forming an opinion and reporting on financial statement. Friends, the member generally make a query to me while doing the tax audit seminar or webinar, whether the provisions, whether the SA 700 is applicable while issuing the tax audit report in form number 3CB or 3CA. So friend, the answer to this question is yes. The answer to this question is yes. Then member asked me again, where is the space? Where is the space provided in form number 3CB or 3CD to mention these relevant paragraph of SA 700 while issuing or while giving an opinion and reporting on the financial statement of SSE? So ICI in tax audit guidance note very clearly clarified this fact. I am reading the paragraph number 11.9 of Income Tax Act 1916, 2014 edition, guidance note on tax audit. Please read it very carefully. Guidance note on tax audit under section 44AB, edition 2014. What it says? ICI had pursuant to issuance of revised SA 700, forming an opinion and reporting on financial statement, prescribed a revised format of auditor report on financial statement. Since form number 3CA and form number 3CB are required to be filed online, in preset form, and the same are not in line with the requirement of SA 700. There is no specifically allocated field. Please note that there is no specifically allocated field for providing information relating to the respective responsibility of the assessee and the tax auditor as required in the terms of principle laid down out in SA 700. However, please read it very carefully, my dear friend. Whoever attending this webinar, please read this paragraph very, very carefully. However, having regard to the importance of this respective responsibility paragraph from the perspective of readers of the tax audit report, it is suggested that the respective responsibility paragraph relating can be provided in space provided for giving observation under clause 3 of form number 3CA and clause number 543CB as the case may be. If you are issuing report in 3CA, then you have to mention this fact. You have to give this relevant responsibility paragraph of assessee and tax auditor under clause 3 of form 3CA and clause 5 of form number 3CB. So this is very, very important, my dear friend. SA 700 compliance is very, very important and mandatory from the point of view of tax auditor. From the point of view of tax auditor. So friends, it is all about SA 700 and what the Taxation Audit Quality Review Board says about that. What is the observation of board? The TAQRB of ICI given the observation on that particular point. While reviewing various tax audit reports, it was observed that what they have observed, many of tax audit reports didn't have the paragraph relating to the assessee responsibility and tax auditor responsibility as required by guidance note in respect of SA 700. Some of the tax audit report contained a reference. Some of the tax audit report contained a reference about the attached note and report which mentioned this paragraph, thereby complying with the requirement of SA 700. However, as per the guidance note of tax audit issued by the ICI, the same are specifically required. The same are specifically required to be mentioned and reported in clause 3 of form number 3CA and clause number 5 of form 3CB as the case may be. I am not telling you that. This is the education literature which I have reading you or I am reading with you from the perspective of TAQRB, which is the main mission to educate the member about improving the quality of tax audit report. And they are advising you, they are guiding you, they are educating you to report the relevant paragraph of assessee and tax auditor responsibility with regard to SA 700, specifically in form number 3CA and 3CB at relevant clause 3 or 5 only. So that's all from my side with regard to SA 700, my dear friend. What action you have to take, I have told you. Moving further. Moving further, my dear friends. Now coming to the particulars to be furnished in form number 3CD, part A. The first clause I am touching today is clause 2, clause number 2 of form number 3CD, which talks about address of the assessee. Which talks about address of the assessee. This is very simple clause. Now the question coming to the minds of many of the viewers who are attending this webinar is why you are teaching me this very simple clause, address of the assessee. I know what is the address of the assessee, but many members are committing mistakes in this clause also. the requirement as per guidance note on tax audit under section 44 AB of Income Tax Act 1961 is as under. The address is to be mentioned under clause 2 should be same as has been communicated by the SSC to the Income Tax Department for assessment purposes as on the date of signing of audit report. Very important, my dear. What guidance the Institute guidance note is given? What the guidance they are given us? They are saying that address to be mentioned in clause 2 of form number 3CD should be such a address which is address available with the department for assessment purpose as on the date of signing of audit report. As on the date of signing of audit report. So you have to check this address. Which address is available with the department for the purpose of making assessment. It is not to be checked on the 31st March. It is to be checked on date of signing of audit report, my dear friends. This is very, very important thing which Institute is guiding us. As on the date of signing of audit report. If the tax audit is in respect of branch or a unit, the address of branch or unit should be given. In case of company, the address of registered office should also be stated. In case of company, the address of registered office should also be stated. In case of corporate assessee, if the place of business is different from registered office address, then both such address is to be given in form number 3CD. In case of company, the address of registered office should also be stated. In case of new assessee, the address should that be of principal place of business. And what is the observation of Taxation Audit Quality Review Board? While reviewing various tax audit report, it was observed that address reported under this clause was different from one mentioned in the annual report or as registered with MCA. What is the observation of Taxation Audit Quality Review Board? They are saying in many review reports we have found that two different addresses are there. The address mentioned in annual report or registered with the Ministry of Corporate Affairs in MCA data and the address mentioned in the form number 3CD are different. That is not permissible. From the point of view of improving the quality of tax audit report, it must be same. It must be same. Or if it is a corporate assessee and principal place of business address is different, both should be mentioned. Both should be mentioned. Getting my point? Moving further, my dear friends. The next question, clause number 4. Clause number 4. Clause number 4 deals with whether the assessee is liable to pay indirect tax. Whether the assessee is liable to pay. But question they are asking, whether the assessee is liable to pay indirect tax, like excise duty, service tax, sale tax, GST, custom duty, etc. First question, the department is asking from the auditor. The department is putting responsibility on the shoulder of the auditor, tax auditor particularly, to verify the fact that whether that particular assessee to whom you are auditing are liable to pay indirect tax. Suppose a person is engaged in agriculture goods, dealing in agriculture goods or some exempted item. He's mentioning in form number 3CD, he is not liable to pay indirect tax. But being an auditor, you have to verify this fact. You have to check this fact. you have to report on this fact whether, as per the provision of CGST Act, the particular item in which your assessee is doing business falls within the ambit of GST or not, or whether if it falls under the GST ambit, whether the assessee is liable to pay indirect tax. The message I want to convey you, my dear friends. The second question is yes. If yes, please furnish the registration number or GST number or any other identification number allotted for the same. Now, what they are using the word? If yes, if you tick yes, liable to pay, then furnish the registration number, GST number, or other identification number allotted for the same. Now, what the guidance note says? Please, what the guidance note says? The guidance note says the auditor is required to mention the registration number or any other identification number, if any allotted, in case of assessee is liable to pay indirect taxes like excise duty, service tax, sale tax, custom duty, etc. The levy of different type of indirect taxes on various transactions may differ from state to state. Thus, it is recommended that the auditor should obtain from the assessee the list of indirect tax applicable to him from state to state. Getting my point? If your assessee, your client is having business from more than one state, then taxation, particularly from the point of view of indirect taxes, differ from one state to another. In such a circumstance, guidance note of institute is recommending the member to obtain from the assessee. The auditor should obtain from the assessee the list of indirect taxes applicable to him. Once the auditor obtains this management representation, he is required to obtain a copy of registration certificate. He is required to obtain a copy of registration certificate clearly mentioning the registration number under that relevant law. For example, service tax registration number, excise registration number, VAT registration number, CST registration number. The assessee may have multiple registration for various manufacturing units, service unit, godown under the same law. In such circumstances, my dear friend, a copy of all registration certificate is to be obtained from assessee for appropriate disclosure under this clause. In such a circumstances also, a copy of all registration certificate is to be obtained from the assessee for appropriate disclosure under this clause, meaning thereby for maintenance of proper working paper to make it as audit evidence. Here the auditor is advisable and the institute is giving guidance to the member. He don't put registration number by just copying and pasting. To verify the genuineness of number put here, please obtain the copy of all the registration certificate. Please obtain the copy of all the registration certificate from the assessee for appropriate disclosure under this clause. Where indirect tax law do not require any registration, appropriate identification number may be reported in this clause. Like in case of import and export, there is no requirement to take registration, but there is an appropriate identification mark is there. That is in the shape of IEC code, import export code. Then this code is also to be mentioned here. So it is all about clause 4. And what further guidance is there? The auditor has to keep in the mind standard on auditing 580, that is written representation. Written representation. Standard SS 580, that is written representation. In case auditor prima facie is of opinion that, in case the auditor prima facie is of opinion that any indirect tax law is applicable on business or profession. Any indirect tax law is applicable on business or profession of the assessee. But assessee is not registered under said law. He should report the same appropriately. He should report the same appropriately. Suppose GST registration is mandatory for the assessee to whom you are auditing, but ignorantly or deliberately he has not taken the GST registration. In your opinion, as per your understanding, as per your knowledge and belief, that particular assessee is liable to pay indirect tax in shape of GST, but he has not taken the GST registration. Then the fact is to browse to the notice of tax authority by giving appropriate disclosure, reporting, opinion, whatever you want to give in form number 3CA or 3CB. Because as said earlier, it is your karma bhumi. It is your karma bhumi. Moving further, my dear friends. Now, what are the observation of the Taxation Audit Quality Review Board with regard to that particular clause 4? Observation. While reviewing the tax audit report, it was observed that it was observed that registration under all indirect tax law which have been mentioned in the report under company's auditor report CARO have not reported under this clause. You have mentioned so many things in the CARO. You have mentioned so many registration in the CARO. But here you are saying that I am not liable to pay indirect tax. That's why no reporting is required there. So please make a consistency between your CARO and TAR. CARO and TAR. Registration number under indirect tax law, some of which are based on assessee PAN, did not match with the PAN reported in clause 3 of form number 3CD. Very important. Very important observation of the TAQRB. But it say now many of the indirect tax registration are PAN based, like GST number. But the PAN number mentioned in the form number 3CD and GST number mentioned in form number 3CD, which is also a PAN board, but both places PAN are different. But both places PAN are different. How it can be possible? Either you are reporting something wrong, or the assessee is giving inaccurate particulars in form number 3CD. So please also take care of that. Now, many of the indirect tax registrations are PAN based. So please ensure that all the members, all the tax auditors are requested to ensure that the registration number under the indirect tax law and the PAN number mentioned in the form 3CB or 3CD for whom you are issuing a tax audit report must be same. But if there is reporting, there is a mismatch, there is a reason behind that. Then appropriate reporting of this match was not found. If there is a mismatch due to some genuine reason, due to some genuine belief, and you raise a question, you raise a query, and the assessee has replied to you very satisfactory, then you make a appropriate disclosure in your report in form number 3CA, clause 3, and form number 5, clause 1. Your Karam Kshetra is there. Your Karam Kshetra is there only. Getting my way. Moving further. Now come to clause 8. After 4, clause number 8. That is the very important clause, which is also referred by Vice Chairman of the Board, CA Shekhar Chitleji, how to pick a particular clause. Many members have committing mistake in that. There are lot of complexity involved in choosing a particular clause. There is lot of application of mind is to be applied here, so that a particular clause of section 44 AB is ticked correctly here. The requirement of this clause form 3CD is to report that the relevant clause of section 44 AB under which audit has been conducted. The head clause as per the present drop-down menu of e-filing utility of tax audit report have been briefed here under. First clause is section 44 capital AB sub clause A. In case of assessee carrying on business and his total sale, turnover or gross receipt, as the case may be, exceeds the specified limits in the relevant previous year, the auditor is required to mention clause A under this. But it says, I am reading once again, assessee is carrying on business. The first thing you have to note here that the word business, that means this clause you cannot pick. This clause you cannot pick unless you are doing business. If you are doing profession, this clause is not applicable to you. In case of assessee carrying on business, if his total sale, turnover, gross receipt, as the case may be, exceeds the specified limit in the relevant previous year, then auditor is required to mention clause A under this head. If you are carrying on business and your turnover, gross receipt or sale is likely to exceed 1 crore, then you have to take on that. But friends, if you have turnover more than 1 crore, but earlier year you have opted for section 44 AD, you are declaring income on presumptive basis. Now you are opting out of section 44 AD, and by virtue of sub clause 4 of section 44 AD, by non-compliance of section 44 AD section 4, you have required to get your account audited now. Then some different clause is there. Here clause A is not applicable even if your turnover exceeds 1 crore. Please try to appreciate. Now moving to the proviso to section 44 AB, subsection A, provided that in section 44 ABA, that is the proviso to subsection 1 of A. 44 AB, provided that in case of person whose aggregate of all amount received, including amount received for sale, turnover or gross receipt during the previous year in cash does not exceed 5% of that amount, and aggregate of all payment made, including amount incurred for expenditure in cash during the previous year, does not exceed 5% of that payment, then higher limit of 10 crore shall be applicable. If then higher limit of 10 crore is applicable, in this case, if the assessee is carrying on business where aggregate of cash receipt and cash payment exceeds the specified limit, in the relevant previous year, then auditor is required to mention, please note very, very carefully, my dear friends, proviso to section 44 ABA. All my learned friends, all my learned professional colleagues, please note that if you are not liable to, you have getting the extended turnover limit because of proviso to 44 AB subclause A, then you have to mention proviso to subsection 44ABA, not 44ABA only. Getting my point? And further, very interesting thing here is the higher turnover limit of 10 crore. The higher turnover limit of 10 crore is available to person carrying on business only. Carrying on business only. If you are doing profession, there is no such provision is there. There is no higher extended limit of turnover is there. Then you have to fall in clause 44AB, sub clause B only, which now I am reading with you. If the assessee is carrying on profession, if the assessee is carrying on profession and gross receipt exceeds 50 lakhs rupees in the relevant previous year, the auditor is required to mention clause B under this head. If the assessee is carrying on profession, only then B is applicable. And gross receipt exceeds 50 lakhs rupees in a relevant previous year, the auditor is required to mention clause B in this. Friends, please note that. Please note here that. Here, the word used is profession. Here, the word used is profession. If we read section 44AA, which deals with the maintenance of books of account with regard to income tax law, it talks about three kinds of professional. One is specified professional as per section 44AA subsection 1. Then there is a non-specified professional, and third category is also there, that is other professional. I am dividing professional into the three categories by applying the provision of section 44AA of income tax. Specified professional, non-specified professional, and other professional. Now, why I am using the word other professional? Now I am using the word other professional. I am using the word other professional here, my dear friends, because the definition of word profession given in the income tax very clearly writes, very straightforward right, profession includes vocation, full stop. Very interesting. Profession include vocation. That means vocation is part of profession, not business. My dear friends, please try to appreciate. Vocation is part of profession, not business. That means, as per my little understanding of the law, however, I am not the expert of law, I am still a student of Income Tax Act. I always say, but as per my understanding, profession include vocation, business does not include vocation, and vocation is the part of profession. If it is part of profession, then the turnover limit, gross turnover limit is 50 lakhs only for my audit. No 1 crore, no 2 crore, no 10 crore. For you are doing tutoring business, you are taking seminar or webinar, that means you are carrying on vocation. For teaching, there is no specified degree required. You are providing training to some skill-based courses. You are a YouTuber. You are earning from singing. In such a case, you are doing the vocation. So, my dear friend, in such case, the higher limit of 1 crore or 2 crore is not available to you. Even then 10 crore is not available to do because profession include vocation, business does not include vocation. Getting my point? So only 50 lakhs limit is available there, my dear friends. Moving further, sir. (44AB) sub clause C. Likewise, if the audit under section 44AB is conducted by virtue of provision 44A, 44BB, 44BBB. 44A, 44BB, 44BBB, then these clauses is to be ticked. I am not touching much upon that. Now coming to 44ABD. 44ABD. For audit being conducted by virtue of section 44ADA, clause D is to be mentioned under this head. This means, what it means? If the audit is conducted by virtue of provision of section 44ADA, that means if you are a specified professional, like chartered accountant, doctor, lawyer, architect, etc., and you are doing the specified profession and you are not declaring income at the rate of 50% of your gross receipt, your actual profit is less than the 50% of your gross receipt. In such a case, the mandatory provision of section 40ADA makes the liable to the SSC who is carrying on specified profession to get their account audited from a chartered accountant. If the audit is conducted because of the provision of section 44ADA, which is talking about only specified professional, then clause D is applicable, my dear friends. Then clause D is to be mentioned here. And when clause E is to be mentioned? Clause E is to be mentioned when there is non-compliance of 44ADA4. Suppose you have opted for 44AD, you have opted for presumptive taxation scheme for a businesses. And after opting out, you are now opting out of the scheme due to any reason. Then in such case, you are required to get your accountant for next subsequent consecutive 5 assessment years. And if the audit is conducted because of section 44AD, sub clause 4, then clause E is to be mentioned under this head. Or friend, if you are mentioning clause E under this head, this audit are not counted for counting the tax audit ceiling limit of 60 audit. 60 audit की लिमिट काउंट करने के लिए भी ये काउंट नहीं किया जाएगा. So moving further, my dear friends. In addition, the e-filing utility provides for reporting as third proviso to section 44AB. As the provisions of third provision to section 44AB, in case where such person is required by or under any other law to get such account audited, it shall be sufficient compliance with the provision of this section if such person gets the account for such business or profession audited under such law before the specified date and furnishes by that date the report of audit as required under such other law or further report by an accountant in the form prescribed in the section. That means if you are a corporate assessee or you are a LLP and for that particular year your accounts are required to be audited under any other law, then you can use, you are giving his tax audit report in form number 3CA. In such a case, as very rightly pointed out by C.H. Itleji, third provision to section 44AB is to be selected. So friends, it is all about clause selection. Sorry. Moving further. Okay. Now, what the Taxation Audit Quality Review Board thinks about that particular clause? While reviewing the tax audit reports, it was observed that companies which are required to get their account audited under the Companies Act 2013 had selected option clause 44 AB, अब clause A, total sale turnover gross receipt in a business exceeding specified limit instead of option third provision to section 40 AB quoted under law. So that means in case of corporate assessee, you have to select this only. Third provision to section 44 AB. Moving further, friends. Now come to clause number 10. Clause number 10 deals with nature of business or profession. If more than one business or profession is carried on during the previous year, nature of every business or profession. If there any change in the nature of business or profession, then particular of such change. Two questions asked here. Nature of business or profession. If more than one business or profession is carried during the previous year, nature of every business or profession. If there is any change in the nature of business or profession, then particulars of such change. Getting my point? This clause 10 requires reporting about nature of business or profession, but it is mentioned by the SSC in form number 3CB in a very, very lazy manner. Generally, most common trend is trading others, service others, manufacturing others. Getting my point? Or retail business or wholesale business, very common clauses. We are don't going into deep into these clauses. But the law says nature of business or profession. If you are doing trading, what kind of trading you are doing? If you are doing manufacturing, what kind of manufacturing you are doing? If you are a professional, what kind of profession you are doing? If you are providing service, what kind of services you are providing? So my dear friend, instead of putting 4 or 5 common or most prevalent code in these clauses, please go for specific. But the Institute Guidance Net says on that. But the Institute Guidance Net says on that. Please read with me. 19.1. In regard to nature of business, the principal line of business to be determined and stated in this clause, the sector in which business or profession falls, such as manufacturing, trading, commission agent, builder, contractor, professional, service sector, financial service sector, entertainment industry, is to be mentioned specifically. In case person belong to a service sector, the nature of each type of service should be stated broadly. The nature of each type of service should be stated broadly. Therefore, the auditor is required to mention subsector pertaining to the sector selected. Information has to be furnished in respect of each business. The code is to be mentioned against the nature of business pertains to the main area of business activity. Information had to be furnished in respect of each business. The code to be mentioned against nature of business pertains to the main area of business activity. Any material change in the business should be precisely set out. The change will include change from manufacturer to trader. If you are doing, earlier you are a manufacturer, but during the year you become a trader, then the effect should be mentioned. The change will include change from manufacturer to trader or vice versa, as well as change in the main line of the business. Or likewise, any addition to permanent discontinuance, a particular life of business may also amount to change reporting. So, friends, in case of business reorganization, reconstruction, if there is a similar line of activity, no reference need to be made. However, If new line of activity emerges because of business reorganization, reconstruction, it may be stated. Now, what is the view of Taxation Audit Quality Review Board? The review board says that it was observed that codes for business or profession for all main activities, principal line of each of the business were not reported, where there could be located clearly from the annual report. In tax audit, you are mentioning just manufacturing, but in annual report, your director report or your auditor report is saying that manufacturing of chemical, manufacturing of tires, manufacturing of motor, manufacturing of IT goods. There are so many things. The message I want to give here, the message I want to convey here that don't go with general codes. What are activities? What are the lines of your business? And whatever type of business you are doing, every business activity is to be mentioned here. While reviewing the tax audit report, it was observed that codes for the business or profession for main activity, principal line of business were not reported. You are not reporting all of your main activities, and all main activities is to be reported. Wherever your annual report is saying that you are doing so much of these activities, so how it can be possible? Please take care of that. Moving further, now coming to the books of account. This topic is very important. Clause 11. Clause 11. Whether books of account are prescribed under section 44AA. If yes, list of books so prescribed. Whether books of account are prescribed under section 44AA. If yes, list of books of account so prescribed. And the B clause of clause 11 asks about list of books of account maintained and the address at which books of account are kept. In case books of account are maintained in a computer system, mention the books of account generated by such computer system. If the books of accounts are not kept at one location, please furnish the address of location along with the detail of books of account maintained at each location. And then list of books of account and nature of relevant document examined. This is the relevant clause number 11 of form number 3CT. Now, what the guidance note says, the first very important thing which I want to bring to your kind notice of all the learned professionals who are attending this webinar, the CPDT under Rule 6F of Income Tax Rule 1962 has prescribed books of account and other documents to be kept and maintained by a person carrying on certain profession specified in subsection 1 of section 44AA. Meaning thereby, the Rule 6F, which is framed by CBDT, prescribe books of account only for certain kind of professional who are specified professional in subsection 1 of section 44AA. As such, ever person carrying on legal, medical, engineering, architecture profession, profession of accountancy, technical consultancy, interior designer or authorized representative or film artist, or whose total gross receipt exceeds 1,50,000 rupees on all the 3 years immediately preceding the previous year, or where the profession has been newly set up in the previous year, his total gross receipt from the profession for that year are likely to exceed the head amount is required the following books of account. That means books of account are prescribed only in the case of specified professional. The most common mistake found in the tax audit reports issued by the members is when the form asks a question whether books of account are prescribed in section 44AA, he mentioned yes, He mentioned yes, whereas the answer is straightforward no, except in case of certain professionals specified in subsection 1 of section 44AA. So, my dear friends, in case of these specified professional, these books of account are required to be maintained. Cash book, journal if accounts are maintained according to the mercantile system of accounting, and ledger. In case of person for whom books of account are prescribed under Rule 6F, the list of books of account so prescribed have to be stated in 11A. These three books. Sometime an SSC may carry on multiple activities. Books of account might have been prescribed for one of the activities. In that case, mention may be made of the activities for which books of account are prescribed. आपकी किस एक्टिविटीज के लिए बुक्स ऑफ अकाउंट प्रेस्क्राइब की गई हैं, और दिस इज द मोस्ट कॉमन मिस्टेक. सेकंड थिंग, the tax auditor should require to obtain a complete list of books of account and document maintained by him, both financial and non-financial records, and make appropriate marks of identification to ensure that identification of book of account record produced before the audit. The list of books of account maintained by the SHC, the list of books of account maintained, whether now it is not asking about what books of account are prescribed. Now he is asking the question, the tax department is asking the question, what books of account you are maintaining to determine your correct and true profit. Getting my point, my dear friends? The point B is asking for the list of books of account maintained by the SSC should be given. Here, what books of account are prescribed? Generally, no. Only yes in the case of specified professional, as mentioned in subsection 1 of section 44A. But everybody is maintaining books of account. If you're doing business and your accounts are liable for audit, you are maintaining certain kind of books of account. What books of account you are maintaining, that is to be mentioned in 11B. That is to be mentioned in 11B. In case where books of account are maintained and generated through computer system. Generally, in today's era, in today's digital India, books are maintained on computer system. Books are maintained on the computer system. In case where books of account are maintained and generated through computer system, the auditor should obtain from the SSC the detail. Very important, my dear friends. In case of bank, in case of NBFCs, in case of financial institutions, in case of businesses having multiple franchises, in case of businesses having multiple retail outlets, but centralized accounting is being done. In such cases, if you are doing the tax audit and you have the assignment of a tax auditor, then the auditor should obtain from the SSC the detail of address of the place where server is located, or principal place of business, or head office, or registered office, by whatever name card, and mention the same accordingly in clause 11 subclause B. That means in case your books are maintained or generated through computer system, the address of the place where server of your computer system is located is to be mentioned in point number 11B, my dear friends. Moving further. Then it talks about relevant vouchers, relevant documents. Books of account examined would constitute the books of original entry and other books of account. In addition, list of books of account examined, the author should mention the nature of relevant document examined. What is the nature of relevant document examined? There are so many documents we examine for the purpose of audit. But what document you actually examine to maintain the evidence? To maintain the evidence, what you have made. Here you have to mention bills, vouchers, receipts, debit note, credit note, inventory register, agreements, order, etc., etc., etc. The Auditor General examines this document while conducting the audit. The underlying document would differ from assessee to assessee, business to business, client to client, depending upon the nature of activity carried on by the assessee. Reference to such supporting document and relevant document is also required to be made under this clause. Attention is drawn to para 14.3 and 14.4 of guidance note with regard to term relevant document. Please read it very carefully. 14.3. The auditor is required to examine not only books of account but other relevant documents. Please underline it. To examine not only the books of account but also the relevant documents. Not only to examine books of account but also the relevant documents relating to the transaction reflected in the books of account, like purchase invoice, copy of bank statement, bills, voucher, various agreement, contracts, other document, on basis of which preliminary entries are passed or recorded in the books of account. And now, what are the observations? What common mistakes we are committing here, as pointed out by our Honorable Taxation Audit Quality Review Board? Taxation Audit Quality Review Board. For companies, no books of account have been specifically prescribed under Section 44AA of Income Tax Act 1961 or Rule 6AF of Income Tax Rule 1962. In some cases, yes was reported, while no should be reported under this case. Because whether company can do profession? No. The answer to this question is straightforward, no. And what the Rule 6AF says, or what does say Rule 6AF prescribed? Rule 6F prescribed books of account only for certain specified professional as per the Section 44A, subsection 1. So in case of company SSCs particularly, the person of journaling mentioned yes, where books of account prescribed question is asked. Please note that no should be reported under this clause. Second very important question. The second very important advice, as pointed out by our Honorable Taxation Audit Quality Board. Location of maintainer for books of account was not reported, while the same is the requirement of the form. Books of account maintained is mentioned, but where these books of accounts? Where is the location? Different books can be at different location. Then each different location is to be mentioned. This is a statutory requirement of form number 3CD. But many cases we ignore this. The location of maintainer for books of account was not reported, while the same was the requirement of the format as well as the guidance note of tax audit under Section 44AB of Income Tax Act. Another very interesting fact, the fact books of account are maintained in computer cases on computer system was not reported in many cases. Everyone is maintaining books on computer system, but this fact is not brought to the notice of tax authorities. Even the interest of server is not there. Books are maintaining at multiple locations, but server is situated at one centralized place. Then the server address is to be given as per the guidance given by the ICI guidance note. But no one is giving such a information. It is absolutely wrong, my dear. Here we have to improve our quality. That's why these kind of programs are bring out by the Taxation Audit Quality Review Board. The various relevant document examined like bill, voucher, receipt, debit note, credit note, inventory register, order, original purchase invoice, copy of bank statement, agreement, contract, or any other document on the basis of which the preliminary entry was passed in the books of account have missing in reports in various cases. Moving further. Now, move to clause number 13. Clause number 13 is also very close to my heart. For that, I want to plan a separate section because this relates to very, very common and very interesting thing, particularly the clause D and E. Here I want to touch upon. to 13 clause D and 13 clause E, because this deals with ICDS, income computation and disclosure standard. Here we have to report regarding applicability and compliance of ICDS. My dear friends, we are doing the audit of books of account maintained by the SSC. At one place, the technical guidance note on ICDS, the institute itself very clearly says that ICDS is nothing to do with books of accounts. It is only for income computation under the Income Tax Act. And as far as disclosure is concerned, it is talking about disclosure about this income computation standard, applicability and compliance level in your tax audit report. Friends, this is the additional responsibility cast on the shoulder of tax auditor. You are not supposed to checking the accuracy of books of account maintained by the SSC, but from the income tax point of view, you have to report, you have to verify whether the provisions with regard to ICDS applicability has been complied or not, and this fact is to be brought through your tax audit report. And for that, there is a clause number 13, subclause D, and 13, subclause number E is here in form number 3CD. Now starts our discussion with 13, subclause D. Whether any adjustment is required to be made to the profit and loss account for complying with the provisions of income computation and disclosure standard notified under section 145, subsection 2. But the question is, read it very carefully, whether any adjustment is required. What question the tax authority is asking from you? Whether any adjustment is required. Kahan? To be made to the profit and loss. To be made to the profit and loss. For what purpose? For complying with the provision of ICDS. Which ICDS? Which are notified under subsection 145, subsection 2. Yani, meaning thereby, this adjustment is required. This is question number 1. And where this adjustment needs to be made? In the profit and loss. That is adjustment number 2. And which regard this adjustment to be made? This is the question number 3. And for which, what we have to study? We have to study 45, subsection 2, 145, 2. So 4 basic things we have to know before we go deep dive into this approach. So this is 13D, what to do. And 13E asks, if the answer to D above is affirmative, give detail of such adjustment. Then this is to be given if the answer to D is affirmative. If you tick yes on D, then if you tick no on that, it is disabled, remain disabled. But if you put yes here, only then E comes into the picture. E comes into the picture. If answer to D above is affirmative, give detail of such adjustment. So you have to tell ICDS wise what is the impact on profit. And there is 10 accounting income computation and disclosure standard ICDS. 1 deals with accounting policies. ICDS 2 deals with valuation of inventory. ICDS deals with construction contract and so on. What is the impact on increase in profit? And then what is the impact on decrease in profit? And what is the net impact? And 13 clause F deals about disclosure of the ICDS. Disclosure ICDS. ICDS 1, 2, 3, 4, 5 and 7, 9, 10. If you read it very carefully, disclosure with regard to number 6 and number 8 is missing. Number 6 deal with changes in foreign exchange rate and 8 is securities. Regarding these 2, disclosure requirement is not there. The disclosure requirement for notified ICDS is as per the technical guide on income tax and computation income computation and disclosure standard issued by the Direct Tax Committee of ICI can be referred through this link. Here you can the technical guidance. But what are the observation of our Honorable Taxation Audit Quality Review Board, particularly with regard to point number 13D and E? Read it very, very carefully. The main motive of me to be here to teach you only this. While reviewing various tax audit reports, it was observed that if any adjustment is required to made to the profit and loss account, if any adjustment is required to be made, only then 13D and 13E comes to play. If the answer is no, there is no role play. If any adjustment is required to be made to the profit and loss account for complying with the provision of income computation and disclosure standard, then detail of such adjustment is required to be reported under clause 13E. In such cases, clause 13D, yes, is to be selected from drop-down menu, as I told you earlier. Once the same is selected, the form enables reporting details for such adjustment under this clause. In many cases, no is selected in 13D while reporting under clause 13E. However, detail of such adjustment is found to be reported in 13F, which is absolutely wrong. If 13D is yes, then reporting is to be given in 13E, not in 13F. 13F deals with the disclosure requirement only. So please take care of that. 13F required disclosure in respect of certain notified ICDS, which was not done in many cases. We are selecting it no, but we are not taking care of 13F in many cases. Many such report is reviewed by Taxation Audit Quality Review Board. So they are guiding us. Please start reporting on this also. In few cases, disclosure were made where any deviation from notified ICDC was counted. वहीं पे जहां पे डेविएशन है वहीं पे डिस्क्लोजर दिया गया ऐसा उनका कहना है. तो एज आई टोल्ड यू अर्लियर, इसके रिगार्डिंग डिस्क्लोजर रिक्वायरमेंट नहीं है. और फर्दर ICDS 5, that is tangible fixed asset, the prescribed disclosure requirement is similar to the requirement of clause 18 of form number 3CD. Accordingly, reference to reporting as done under clause 18 may be given. Valuation of inventory. Valuation of inventory, that is cost or net realizable, whichever is less. Lower of cost and net realizable value as per AS2. Friends, if we read it from utility, that is cost or market price, whichever is less. There are three different dimensions are there. In form number 3CD utility, as provided by the Income Tax Department, the wording is cost or market price, whichever is less. Whereas ICDS 2 talk about cost or net realizable value, whichever is less. Whereas revised AS2, which deals with the maintenance of books account, it talks about lower of cost and net realizable value. Meaning there were all three places, different words are used. Please again note in your mind, ICDS is only for income computation purpose. AS2 is only for maintenance of books of account. And utility is for reporting purposes. But there is no drop-down box, there is no column is there. Cost, market price, cost or market price, whichever is less. So unfortunately, the utility compels the tax auditor to choose cost or market price, whichever is less, which is a different treatment, which is a differential idea as given in ICDS 2 or AS2, as the case may be. The institute is saying that in few cases, the accounting policy is reported was as per the language prescribed in para 5 of revised AS2 and not as per 3 of ICDS 2. So while reporting in ICDS 2, the reporting under clause 13F is required to be done as prescribed by ICDS, which was not done. There could be limitation in form uploaded on ITR portal, which provides certain wordings in the drop-down list. How the auditor should ensure that correct valuation method in hard copy issued to the auditor. This line I am underlining for you. The auditor should ensure that correct valuation method is mentioned in the hard copy issued to the auditee. Moving further. Clause 40. Method of valuation of closing stock implied in the previous year, or in case deviation from method of valuation prescribed under section 145A, the effect thereof on profit and loss account please furnish. This is again most ignored clause. We never take care of section 145A. I very boldly stating that many members are not taking care of that 145A and method of valuation of closing stock implied in the previous year. What the guidance note says, the requirement of guidance note on tax audit under section 44AB of Income Tax Act is under the method of valuation followed by the SSC having regard to the article or goods dealt in or manufactured by the SSC should be clearly indicated. Should be clearly indicated. Because the method of valuation followed by the SSC with regard to closing stock. Here the word, nowhere word used, inventory is used. In form number 3 CD, the word closing stock is used, my dear friend. Here the word closing stock is there. So the method of valuation followed by the SSC having regard to the article of good dealt in or manufactured by the SSC should be clearly indicated. That should be category wise. Raw material, what is the method of valuation? WIP, what is the method of valuation? Finished goods, what is the method of valuation? If it is not possible in the filing utility, then it must be provided in hard copy issued to the auditee for this purpose. This fact is to mention. Proper reporting is to be done. If utility is not providing the space, mention the thing in form number 3CA or 3CB or 3CB as the case may be. If you cannot put there, at least put all these facts in form number 3CD in hard copy issued by the to the SSC. The method of valuation followed by the SSC having regard to the article or good dealt in or manufactured by the SSC should be clearly indicated. Some examples are given below. Raw material at cost or net realizable value, whichever is lower. Finished goods cost or net realizable value, whichever is lower. In clause A of clause 14 of form number 3CD, the reference made to closing stock. Reference made to closing stock. The expression stock in trade means finished goods or raw material. Since clause B referred to section 145A, the word inventory is used, the term inventory is used. The term closing stock will include all items of inventory. The term closing stock will include all items of inventory. Accounting standard 2 defines the term inventory to include finished goods, raw material, WIP, materials, maintenance supplies, consumable, loose tool. Therefore, method of valuation of all items of inventories will have to be given in subclause A. The common mistake we are doing, we are putting a single remark for all items of inventory, that is cost on net realizable values, in net realizable whichever is less. But this is same is not available in utility. That's why I was using cost on market price whichever is less. The friends, therefore, method of valuation of inventory will have to be given in subclause 1. The detail of deviation, if any, from method of valuation prescribed under section 145 and effect thereof on the profit and loss account have to be stated in clause 14B. Next paragraph, paragraph number 2311. Read it very carefully. I am not saying that, the institute is saying that. It may be pointed that, please read it very carefully, all my dear friends who are attending this webinar. It may pointed that the inclusive method is not permitted by AS2. Underline it. Mind it. और अपनी हार्ड डिस्क में स्टोर कर लीजिए। इट मे बी पॉइंटेड आउट दैट inclusive method is not permitted by accounting standard 2, which is mandatory from accounting year beginning on or after 1st April 1999. Once again, I am repeating my words. It may be pointed out that inclusive method is not permitted by accounting standard 2, which is mandatory from accounting year beginning on or after 1st April 1999. Further, in guidance note on accounting for SENVET, the second method, inclusive method, has been withdrawn. With effect from accounting year commencing from 1st April 1999. In view of above, the adjustment, sir, please note it very, very carefully. I am once again requesting all the member. मैं नहीं कह रहा, इंस्टीट्यूट का गाइडेंस नोट कह रहा है. In view of above, the adjustment under section 145 capital A, the adjustment under section 145 capital A will have to be made in all cases where exclusive method is followed. And what the 145A says, sir? 145 capital A says, sir, for the purpose of determining the income chargeable under the head profit and gains, business or profession, the valuation of inventory shall be made lower of actual cost or net realizable value computed in accordance with the income computation and disclosure standard notified under subsection 1 of section 145. But it says the valuation of inventory shall be made at actual cost or net realizable value, whichever is lower, and that is computed in accordance with ICDS 2, not AS 2, under subsection 2 of section 145. And the second paragraph of section 145A is very, very important. Please read it again very, very carefully. The valuation of purchase, sale of goods or services. Please note, it applicable on both purchase and sales of goods and services. It is also applicable on goods. It is also applicable on valuation of inventory of services. The valuation of purchase and sale of goods or services and of inventory shall be adjusted to include the amount of any tax, duty, cess, fee by whatever name called, actually paid or incurred by the assessee to bring the goods or service to place of its location and condition as on the date of valuation. This subsection 2 of section 145 capital A is very, very important, my dear friend. It is very, very clearly stated. There is no ambiguity in that. But we are not following the same. The valuation of purchase, sale of goods or services and inventory shall be adjusted to include any amount of any tax, duty, cess, fee by whatever name called, actually paid or incurred by the assessee to bring the goods and service to present its location and condition as on the date of valuation. So it is all about me from inventory point of view, but the Taxation Quality Audit Review Board says on that. Observation of but the guidance notes technical as per technical guide on income and computation and disclosure standard relevant extract only. क्या कह रहे हैं? The taxpayer the taxpayer would require to prepare a memorandum account. Would require to prepare a memorandum account to demonstrate. The taxpayer would require to prepare a memorandum account to demonstrate. What to demonstrate? Vice versa, inclusive method. It is tax neutral, and this will be in compliance with section 145A and ICDF. If by preparing this memoranda, if you are in a position to prove that it is tax neutral, then there is no problem. But if you are not preparing a memorandum account, and even your memorandum account is not giving the tax neutral effect, then there may be a certain kind of tax liability may be there, or it may affect your profit and loss. Then definitely you have to report accordingly. And now what the Taxation Audit Quality Review Board is saying? The valuation observation of Taxation Audit Quality Review Board. Number one advice, number one observation of Taxation Audit Quality Review Board. Method of valuation has not been reported under clause 14 subclause A of each item of inventory separately, be it raw material, work in progress, material, maintenance, supplies, consumable, loose tool. For every item of inventory, you have to give separate report. Not by just writing cost or net realizable value, whichever is less, or cost or market price, whichever is less. You have to give this bifurcation in respect of every item, in respect of raw material, in respect of WIP, in respect of work in progress, in respect of supplies, consumable, loose tool, every. In many cases, valuation is done as per AS2 or Indian AS2, and exclusive method was followed. In all such cases, detail of deviation encountered between exclusive method of valuation and inclusive method of valuation as prescribed under section 145 capital A of Income Tax Act, and effect of inclusion of duty and taxes as suggested by para 2311 of guidance note are remained to be reported. Third thing, as per the reporting requirement of clause 14 subclause A, method of valuation of closing stock implied in the previous year is also to be reported. In few cases, the reporting as prescribed for valuation of inventory as per AS2 nor Indian AS2 wherever applicable was not done. Instead, reporting from ICADS was done. Getting my point? In clause 13F, reporting as per ICDS is to be done. But in clause 14, reporting as per AS2 or Indian AS2, as the case may be applicable on you, is to be done. So 13 or 14 clause, both are different, and the advisory, the guidance, the technical standards for both are different, and that is to be reported accordingly, my dear friends. So friends, I think I am able to up to clause 14. Now moving to clause 17. 17th clause say, where any land, building or both is transferred during the previous year for a consideration less than the value adopted or assessed for accessible for any authority of state government referred to in section 43CA or 50C, please furnish the following detail. Clause आपको मालूम है क्या कर रहे हैं? ये clause कब report होनी है? Where the asset is valued less than the value adopted or assessed, either in the case of 43CA or 50CA. But we are reporting everywhere. And the same is also the observation of Taxation Audit Quality Review. While reviewing various tax audit report, it was observed that in certain cases, reporting under this clause was done when consideration received on transfer of an asset, capital or otherwise, being land or building, or both, and the value adopted under section 43CA or 50CA are same. The same is not required. It is required only when where the asset is valued less than the value prescribed under section 43 CA or 50 C, as the case may be. So friends, in today's webinar, I also made a request to the institute earlier before giving this webinar. This webinar is to be conducted in two parts. In first part, we will discuss about clauses 1 to 20. With best of all my effort, I am able to cover only up to clause 17 here today. The rest of the clauses I will discuss in the next session, how to report various clauses and what are the observation of Taxation Audit Quality Review Board in this regard. What advisory is there? So friends, this is all from my side. Thank you for the patience hearing and thank you with me. Now over to the team Taxation Audit Quality Review Board for further question answer session and further proceeding. Over to you. Hello.
Hello.
Yes, sir. If there is any
audible,
question,
sir?
I am ready to answer the same.
Yes, sir. Sir, we have received so many questions, starting from.
Can you able to display on screen?
Okay, sir. We are enabling our video on. Sir, we have received a question that many firms are mentioning that we have not verified and relied on the representation of the management in this regard. In their answer, too many clauses, is this not dereliction of duty of tax auditor?
Many firms are mentioning that we are not verified and relied on representation of the management in this regard. In their answer to many clauses, in this not a dereliction of duty of tax auditor.
I think, sir, question is not clear.
Question is not clear, but they want to ask. Mr. Agwan, please ask me again. And I think second question, what's up to me? If the registered office is situated in city A and the plant is situated in other city, does it require to give the address of plant also? Suppose it is a corporate assessee and the place of businesses are different. Then in my opinion, in address place, you have to give registered office address. And if you are auditing the accounts of different locations, you have to mention the address of plants also. And third question, SSC LLP have workers on roll more than 10, but not taken ESI registration, whether to report financial statement or an audit report. Okay, sir. In my opinion, this is a question with regard to clause number 4 of form number 3 CD, and they are asking about ESI. Sir, ESI, in my opinion, is not a indirect tax. Point clause number 4 is talking about ESI, not talking about ESI. It is talking about only indirect taxes like custom duty, excise, GST, VAT, etc. So it is not required to be reported anywhere. If profession includes vocation, then why it is given under section 44 AD for selection? Sir, where it is given? Where it permits you to choose the section 44 AD? Where the permission is given? Sir, it would be better if you mention the name of the candidate who is asking the question.
So we can take further questions. So,
okay.
If he is not answering.
Okay. If the profession under vocation, then why it is under section 44 AD for selection? I take it. But if the UDN is not applied, but if the UDN is not updated by CA on income tax portal for the respective TAR filed by him within the specified date, Sir, the answer of the same is now it is the requirement from income tax side also to update the UDI. If the UDI is not updated there, that means it seems to that this is not tested or created by a member of ICI. So to ensure the genuinity of the report or confidentiality of the report from your side, it would be better if you create or upload the UDN. Otherwise, the department can declare that tax audit report as invalid report because it is not bearing the UDIN. Treatment of interest on balance on EPF account in case of retired employee. Any TDS is expected since retired employee? Since again, question is not clear. Next question, if the turnover is less than 1/2 crore and income is less than 6 or 8% of the turnover, whether tax audit under section 44AB is to be carried out. It depends, sir. If the turnover is less than 1 crore, then there is no need of audit. If it is the first year. But once you have opted for section 44AD and now you want to opt out of the same, then audit is required, sir. And next question, whether tax audit fee includes audit fees approved by the board of the client of the company. If not, tax audit fees is to got approved from board separately. I think this question is not from my area today. The topic of discussion is different. You are asking a different question.
Okay, sir. We have resolved all the queries of the viewers. And on behalf of TAQRB teams, we thank you for your expert knowledge for the clause 1 to 20. And it's required specific and in-depth knowledge to explain all the in details and clause-wise. So thank you on behalf of our team.
Thank you so much.
Namaste.
Thank you very much, Manoj sir. The session was very fruitful, sir. And I hope the viewers must have liked the way and the presentation also. In case if the viewers have any further questions, we will answer those questions also. Thank you very much, sir.
Ma'am, any specific question is there regarding to my topic, please mail it to me.
Absolutely, sir. Absolutely. Thank you very much, sir.